All right, Alexander, how are you doing today? And we have a special guest, Mr. Crypto Rich himself, who knows everything you need to know about crypto, Bitcoin, Ethereum. So, Crypto Rich, real quick, everyone knows the Oracle of London. Real quick, can you introduce yourself and also plug your channel as well for our viewers?
Fabulous. Alex and Alexander, thank you so much for having me on the show. I listen to all your shows religiously and I'm getting much better informed for it. I have been running a cryptocurrency channel on YouTube since April 2017. I post between 7 to 8 times a week. And for over the last year, I also post on bittube.tv, which is a censorship-resistant platform. People can also find me on Library and BitChute. And I have the links for the YouTube channel and the BitChute channel in the description below. Also Twitter, CryptoRichYT. And what I cover really are cryptocurrency projects that I like, and I build long-term relationships with them over the years. And I lately, since discovering the Duran, and also a shout out to Tom Luongo, I do a little bit of political coverage as well. So thank you so much for having me on.
All right, great. And we will put all your information in the description box down below for our viewers to access it as well. We highly recommend your channel to everybody. And let's get into this. Let's talk about Bitcoin, crypto in general. I know Bitcoin is hot. I know Ethereum is very hot as well. We also have this presidential standoff, and the global economy is obviously waiting as to what's going to happen. Is it going to be Biden? Is it going to be Trump? The stock market is over 30,000. I believe it's been like that for the past few days. That is huge. And I'm sure, Alexander, you will have a lot to add as to how the global economy in general is moving, China, Russia, Europe. But first, let's start with Crypto Rich. Bitcoin, Ethereum, how do you see things today? It seems like every now and then there's always a resurgence in interest in Bitcoin and Ethereum and crypto, and then it dies down a bit, and then there's a resurgence. How do you see things now?
Okay, well, Bitcoin has a 4-year cycle, which is due to its algorithm, which I can talk about in a bit, but I imagine there are many viewers who aren't familiar with Bitcoin. And Alexander, you've said that, it's not something you fully understand. So if I could I'll start by just going through the basics. So Bitcoin was launched, I think, in 2009, in January 2009, by Satoshi Nakamoto. Now, Satoshi Nakamoto is a pseudonym. Japanese or not, we don't know. An individual or a couple or a group, we don't know. Nobody knows. What Satoshi Nakamoto did is he solved the double spend problem. Now, what that is, if I take any digital good, like if I take a video, I download the video of the Duran or an MP3 or a PDF or a Word document or an Excel spreadsheet, I can then copy it infinite number of times and then send it out to people. So I could have a PDF, copy it infinite number of times and send it out to people. So that PDF can be used again and again and again and again. Now that can't work with money. That's why all the banking systems that there are closed systems. I can't take £10 out of my bank account in the UK and then copy it again and again and again and again because the system is closed. I can't move it out. If I could move it out, well, what's to stop me or anybody really from doing what the central banks do by counterfeiting it? They want a monopoly on the ability to counterfeit. So what Satoshi Nakamoto did is he solved the double spend problem so that money can be exchanged in such a way that it can't be copied. Any questions about what I've said, Alexander?
None at all. Carry on, please, because
Okay.
It's interesting.
So I'm going to break it down real simple. What people got to know is my background is in child protection social work. I'm not technical, right? So I'm going to use metaphors to make it simple for people. So if you look around your room, for Alex and Alexander in their room, me in my room, or the viewers in their room, and you consider each of the items of furniture in your room, imagine that they're servers. So the sofa in my room is a server, and the bookshelf is a server, and the TV is a server, and the Christmas tree is a server. And what happens with Bitcoin is that the first transaction is duplicated between every single server. And each server, what it does, it sends it on to the next server, just sends it on. So in order to double spend it, I would need to copy the transactions between every single server. Now, what happens, what Bitcoin really is just a ledger. It's a list of all the transactions that have happened. Alex sent 1 Bitcoin to Rich, who sent 1 Bitcoin to Alexander, who sent half a Bitcoin to Alex, who sent a quarter of a Bitcoin to Rich. And all of those are listed sequentially. And what the computers do is they run this algorithm to keep the ledger moving between the servers. Now, in order to duplicate it, all those, so let's say if there's an error in one, say between my Christmas tree and the window, it gets duplicated there. Unless it's duplicated between all the other connections, the one between the Christmas tree and the window won't fly. It won't get duplicated. It'll get rejected. So that solves the double spend problem. Now, what you have are the servers running an algorithm. It's an open source computer program. And what this open source computer program does is it creates new Bitcoin that again can't be double spent. And the new Bitcoin, the numbers that are issued every 10 minutes halve every 4 years. So we've just had the third halving. So every 10 minutes, 6.25 Bitcoins are born. Prior to that, it was 12.5. Prior to that, and it was 25. So now it's 6.25, and it will remain 6.25 until the next halving in 2024, which will be 3 1/8, if my maths is correct. And then in the next 4 years, it'll halve again. So then what we have is a currency that's the supply is diminishing. The new supply that comes on, a little bit like gold or any of the metals. So when the Europeans first came to North America, apparently they found nuggets of copper as big as a sofa just sitting on the ground, because the Native Americans didn't need them, didn't use copper. But the settlers wanted copper and they started using copper. So all the easily accessible copper was used up. So then they had to dig deeper, took more energy. And they keep digging deeper and keep digging deeper. Now what we've got, say, with gold in South Africa, we have mines that are 2 miles deep because it takes that much energy. It's that scarce to get in. So with Bitcoin, it gets scarce. So it requires more and more energy to produce a diminishing supply. Now, Alexander, does that make sense to you?
Yes, it does make sense. Can I just explain, because this explains a lot about currencies, because perhaps if I can explain a few things about currencies and how money has historically worked. I mean, money has existed in something like a form that we would recognize as money for a very long time in human history, since about the 6th century BC, when it was basically invented in the kingdom of Lydia in Asia Minor. And the idea that the king of Lydia at that time had, this is the dynasty, by the way, which produced the famous King Midas, the man with the golden touch. So, that gives you some idea. What this dynasty did was that they created gold coins, gold being a metal which had always had and still has a large store of value, and which is, of course, limited. And the king basically put his stamp on those coins. So he would then insist that when people paid taxes to him, it would have to be in the form of these coins. It was basically a device for the king to raise taxes. It was sort of recycled. It would recycle through the economy, be paid back to him in taxes in these types of coins. And that, of course, meant that you had a currency based on gold, which has already had a strong store of value in the sense that people accepted gold as something with value, but something which was also legal tender. In other words, something which came with the authority of the state. The state insisted on taxes being paid to it in the form of the currency that was produced this way. And that basically was the framework of currencies as they've existed right up until certainly the 19th century and beyond, and arguably until 1971, when a very important and decisive thing happened. Now, if I could just go back a little bit and explain a little bit more context, there have been occasions in history when various governments have said to themselves, well, you know, we have the legal tender issue. We don't really have that much gold. We have great expenses to run. So what we're going to do is we're going to break the link with gold, and we're going to produce more money, which we're going to insist is legal tender, and we're going to try to fix the value of that money against various goods. Now, I want to stress, you use the word counterfeiting. This isn't counterfeiting, because counterfeiting is a legal concept. A more perhaps appropriate term would be debasement, because they're producing ultimately infinite amounts of money, which they say has legal tender. Now, that happened under the Roman Empire in the 3rd century BC. It happened in China during the Sung dynasty, when the Sung dynasty started to produce endless amounts of printed paper notes. The Chinese were the first people to come up with printed paper. And it was also tried in France in the early 18th century. What invariably happened is that because there was no link to gold, and because the amount of money that could be produced that way was literally infinite, you can just go on printing it, or in the case of Rome, just going on producing endless numbers of bronze coins. That money eventually lost value, and there was very high inflation as people began to move out of it. And in Rome, eventually, the government had to stop using coins for its taxes and actually go over to a barter system. So that's the history of coins. Now, of money? Now, what basically happened in 1971 is that something very similar happened to what happened before under the Romans and, you know, under the Sung dynasty Chinese, in the sense that the governments around the world, especially and primarily the United States government, started to say, well, we are not going to continue any further a link to gold. What had happened up to then, after the Second World War, is that the US dollar was linked to gold, and other currencies were linked to the US dollar in what was called the Bretton Woods system. So the central banks of other countries could insist on payment by the United States government in gold in place of their dollars. The United States said in 1971 that is no longer possible, and as a result, the link between the dollar and gold ended. And what has happened since then is that gradually and steadily, very much as happened in 3rd century Rome and in 12th century China, you have seen that governments, central banks, if you like, have become increasingly tempted to increase the flow of money, the amount of money that they're producing, which they're no longer restrained from doing, because the limiting factor, which was gold, is no longer there. And that's what people mean when they talk about a fiat currency. It is not, let me stress, a counterfeit currency, because counterfeit, again, is a legal concept, but it is a currency that is now entirely controlled by the central banks and by central bank issuance under the overall supervision of governments. And there is no theoretical limit to it. At the moment, it must be said that this has not resulted in inflation, but it has resulted in concern because people are saying, well, since this amount of money can be produced indefinitely, we are losing, we appear to be losing some confidence in it. At least that's the argument. And that's why you see things like Bitcoin starting to appear, because people say that has a genuine store of value because it is limited. And of course, there's also been great interest in gold. So I'm just providing that historical overview.
No, thank you so much. And what was I going to say? The thing about Bitcoin, you could say about Bitcoin and silver and gold, it isn't that they've increased in value, but that the fiat currencies have been debased because their supply has increased so much. And my understanding, Nixon, is it Charles de Gaulle called out Nixon because the US government was printing lots of dollars in order to kill people in Vietnam and finance the war. And de Gaulle called them out, and Nixon said, no, not going to let you see, but we'll get rid of the link between the two. So here we are. Once again, the US government printing lots of money.
It's essentially that. What happened in the 1960s was that the US government was overspending. It was overspending on the Vietnam War. It was overspending on the strategic arms race with the Soviet Union. It was overspending on the moon program, the moon program. And over and above and beyond that, it was overspending to an extraordinary degree on Lyndon Johnson's Great Society program, which is an extraordinarily ambitious project to create a kind of social democratic welfare system in the United States, very similar to those in Europe. And this was creating major budget and trade deficits, which caused European governments, especially the French, to start questioning the overall stability of the dollar. And that's when they started to say, we're not prepared to accept dollars anymore, we want gold. And the US government said in 1971, de Gaulle had gone by this point, well, you can't have gold, and we are going to start paying only in dollars. And then what happened 2 years later was that they found a way to sort of stabilize the dollar. There was a period of great uncertainty between 1971 and 1973 about how this would, work out. But in 1973, the US government negotiated this deal with Saudi Arabia, whereby Saudi Arabia said, we will only accept payment for oil in dollars. This was then copied by all the big oil producers. Oil is the single most important internationally traded commodity. No industrial economy can function without oil. So since oil has to be bought in dollars, the petrodollar was born, and that meant that people around the world had to hold dollars, which in effect gave a certain value from that point on, or rather gave a sort of basic floor under the dollar, and created the system, the international financial system that survives to this day.
Yeah, and then we have a situation. Sorry, Alex.
Yeah, go ahead.
So then we have a system now where, if Bangladesh wants to purchase oil, what it's got to do is got to sell its taka for dollars on the exchange, on the foreign exchanges, and then redeem that for oil from Saudi Arabia or Kuwait or whoever. Exactly. And then the dollars that the US government is digitally printing through quantitative easing, they go abroad into the large foreign exchange market, so then people don't experience hyperinflation. Yes. And what silver and gold and Bitcoin offer are deflationary stores of value. So I could argue it isn't that Bitcoin has gone up in value.
Yes.
It's that the supply of dollars or fiat has increased so much that it takes so much more fiat to be able to get one Bitcoin. And then I think what's happening is that more and more people are realizing this, are becoming awake to this, especially with the incredible printing that's gone on as a response to the lockdowns and the pandemic and stuff. It's okay, well, I got to go put my money somewhere where it's going to preserve value.
Yes.
And Bitcoin offers that. Plus, also, Bitcoin is beyond government control.
Yes.
In a way that fiat currencies aren't, and it's way more liquid and transportable than gold or silver.
It seems.
Can government real quick? Can government figure out a way to lock down Bitcoin?
Here's how they could. What they could do is they can attack or deny regulation or take away permission from the connections, the bridges between fiat and Bitcoin. So, for example, in the US, Binance used to be able to, or Coinbase, you can go
Coinbase.
to Coinbase.
Coinbase is the simplest. Yeah, Coinbase. Yeah.
Yeah. Deposit dollars there or pounds in the UK, and then you can buy Bitcoin. And governments could say, okay, that's not allowed anymore. And Pakistan has done that. Right? There are no fiat on-ramps for Bitcoin in Pakistan anymore, right? That's illegal. What they can't do is destroy the network because it's so decentralized. Bitcoin, the program for Bitcoin is built on the BitTorrent platform. It's that sort of technology. This is where my tech ignorance comes up. And they've not been able to stop file sharing despite all their money. So what they can do is they can stop the connections, the official connections. What they can't do is stop people privately transacting in it in a peer-to-peer fashion.
Right. But if they stamp out those private connections, if every country stamps them out, then how would you obtain Bitcoin?
Well,
the everyday person.
Oh, well, what you'd have, provided we still have cash, is you can use platforms like Local Bitcoins, although that now has KYC, but there's other platforms. I mean, I bought my first Bitcoin in a pub in 2013. I didn't know anything about it. There was very little information. I found somebody on Local Bitcoin in the town that I live in. And I said, look, can you meet with me and explain it to me? We met in a pub. I gave him cash. He helped me set up a wallet, showed it all to me. So it'd be those sorts of informal connections. Plus also, Alex, what's happening increasingly is the emergence of private cryptocurrencies. So Bitcoin is open source. If Bitcoin goes from one address, it's kind of like an email account for those that aren't familiar with Bitcoin, and then it goes to another address, people can see the transaction and they can see the addresses. They can see how much was sent and they can see the addresses. There are private cryptocurrencies, and there's one in particular which, and people who know cryptocurrencies will know about Monero, but there's also Pirate Chain, which I'm one of the team. It's a decentralized community-based project where nobody knows who sent what to who and when, apart from the parties engaged in that transaction. So I can send Pirate Chain from my address to your address, Alex, and Alexander will have no idea because there's no data on the blockchain and it's fully decentralized. So there's more and more, I think, as governments and big tech get more stringent and strict with their censorship, I think there's going to be more and more of the rise of decentralization, which is the promise of blockchain, that it's decentralized. It can't be controlled.
All right. Alexander, how further can governments go with the money printing and in conjunction with the lockdowns and what's happening? I mean, we've talked at length. We've done many videos about the economic situation right now, where it's at and where it's going with the US, with China, with Russia, and with Europe. And you've kind of compared all four different regions and who's going to most likely see light at the end of the tunnel, and which region is going to have a difficult time. But we haven't really talked about it post-election. And I think there are a lot of people that are worried, especially with the potential of a Biden White House, that the wheels can really come undone. So how do you see things now? And in this case, crypto after Alexander, if you can come in and say what that means for Bitcoin, because the uncertainty has to mean that a lot of people are going to move into cryptocurrencies, I would imagine. So Alexander, and then Crypto Rich.
Yes, can I just say, nobody knows how far this process of money creation can go, because we are now in a situation where, as I said, there are some very ancient historic precedents, like what happened in, as I said, China, and what happened in Rome. And by the way, the other place, which is another good example, is what happened in France during the French Revolution, when the French government, the French Revolutionary government, also went to basically a paper currency, which also quickly lost value. But we don't know how far this process of money creation through quantitative easing and all these other devices, quantitative easing is only one of them, by the way, can go, because we've never really seen a situation like this. But what is happening is, at the moment, we are not seeing retail price inflation take off in a huge way, because wages remain very depressed at this time. So there is that lack of demand at sort of mass level. And that is happening because most of this money that is being created is going into certain assets which are exploding in price. And we see those assets like stocks, like property, like sometimes gold, sometimes oil. Either they go up very fast and very high, or they fluctuate. They're very volatile. And I think this is going to continue for some time. And I think this is what I'm taking from what Rich is saying, that one of the things about Bitcoin and perhaps other cryptocurrencies is that they're coming to be perceived not just, or perhaps not so much, as currencies, but as stores of value. So as people are beginning to become concerned about the value of money, the actual value that is being of the money that is being created, they are looking for assets which will retain value, which is where these cryptocurrencies are coming in. Now, what is going to happen with the new Biden administration? Joe Biden has been talking about essentially a kind of New Deal scenario in the United States. He wants to increase spending. It looks as if that's very much the objective. He may have problems getting new spending promoted through Congress, because the Republicans look very strong in Congress, and there's a strong possibility that they will hold on to the Senate. So he's got to find some way to produce this money, to have this money, to see these very ambitious spending programs that he has be brought into effect. And how does he do that? Well, the obvious way to do it is to go to the central bank, to the Federal Reserve Board, and to get them to produce even more. And note that his Treasury Secretary, Janet Yellen, is somebody who has a background in the Federal Reserve Board. She was its former chair, and who is perhaps somebody who might be able to persuade the Federal Reserve Board to actually satisfy this need. We also now have a new economic theory, or cluster of theories, coming together, which have been promoted by some people with very strong left-wing views. Alexandra Ocasio, I can never remember her name.
Cortez, AOC.
I mean, she's a major proponent of them. So to some extent, by the way, has been Elizabeth Warren. This is what is now being called a new monetary theory and its various emanations. I should say that there are various forms of new monetary theory, and I'm to some extent talking about the caricature version, the non-academic version, which is the one that I think people like AOC are thinking about, which is that they say, well, since we've been able to produce so much money and put that money to all kinds of uses, and it hasn't produced hyperinflation, well, we can just go on producing more and more of it, and we can cover more and more expenses because it's worked up till now. So there's no reason why even more of it can't work. So let's go on producing more and more of it, and let's start using it, to build railways, to build, factories, or more importantly, to pay, provide welfare benefits to people, to provide spending to people, to do that kind of thing. Now, the problem if you do that is that in the short term, you could actually bring about a boom because people will suddenly have money in their pockets, which they can spend, money that's been produced in this way, which they can spend, and that could produce a boom. But it could be a boom that very quickly and very disastrously runs out of control with an overheating economy, which is spending money at a far faster rate than it can produce the goods to satisfy it. So you could start to see a surge in imports into the United States to try and, keep up with all this new money that is being created. And you will then be under pressure, if you want to continue with this thing, to go on producing more money to pay for those imports. And then you find yourself arguably in a vicious circle. Stock and asset prices might explode. Retail prices might start to rise. And then eventually you get an overheated economy, and one of two things happens. Either the Federal Reserve Board has to bring the whole process to a stop and start applying the brakes by raising interest rates, which could risk, in the conditions that the US is in at the moment, a very serious recession indeed. Or alternatively, you go on producing more and more money, and then, of course, you have an entirely different crisis, one of excess money and huge inflation, or probably inflation, on your hands, and then the whole thing could implode in a completely different way. So I think people looking at this are saying to themselves, we're very, very nervous about where Biden is going to take us, and so we are going to start piling into still more assets to take, because we're going to go for those things which we are confident are going to retain value. So you see stock markets going up because, stocks are assets, they have value. We will go in perhaps for more property, people investing more in property, people investing perhaps in precious metals, and we've seen gold going up and down and up again. And of course, we will also perhaps look at cryptocurrencies, things like Bitcoin, which, as Crypto Rich has described, and as it seems to me, is clearly perceived by many people as an asset which has a store of value, which is independent of what the Biden administration or central banks do. And how they will try and control it, I am not sure. I don't think ultimately this thing can be controlled, because any government, even the most powerful government, even the most intrusive government, cannot control all economic activity. It cannot dictate to people how they can conduct their lives. If people feel that they've lost confidence in the currency itself and want to carry out transactions or store value in other things, even a government as powerful as, say, North Korea's cannot prevent them doing so. And I mention North Korea because North Korea has also experienced currency crises, monetary crisis within its own economy, and there have been periods when people in North Korea have operated the economy through what were effectively barter systems. So if North Korea doesn't have that degree of control, very difficult to see what governments can do. They can pass laws, they can try and regulate things, but there is only so much ultimately that they can do.
Unless the Great Reset arrives to liberate us from any sort of independence and free economic activity.
Yeah.
And so we're no longer able to engage in private relations. There's a few points I want to make to what you said, right? Mm-hmm. So one is just about who's moving into Bitcoin. In the previous halvings, the previous bull runs, when Bitcoin reached an all-time high in 2013 of $1,000, and then it crashed down to 150. and that was after the 2012 halving. And then it went up to just under $20,000 in 2017, and that was after the 2016 halving. But it's not gone down to where it was at the previous all-time high. What we're looking at here is sometime between now and end of 2021 is a price of an all-time high of between $100,000 to $300,000 Bitcoin. And then it will crash to something below, but it won't be down to 20,000. It'll be in a whole other range because the new supply has so diminished, which is why I'm so bullish on it. And it isn't just retail, ordinary people like myself and Alex and whoever, and some people watching this who are getting into Bitcoin. We also have increasing number of large investors and ultra high net worth individuals moving in because they can see these are people that are financially savvy. You keep printing away fiat, dollars, pounds, and euros and stuff, and we know that increasing supply is going to diminish the value. Well, let me go into something else that has flexibility in a way that Bitcoin does. And by the way, I'm not Bitcoin or gold. I am Bitcoin and gold and silver. And of course, I need to have pounds as well in order to feed my children and the mortgage. So I just want to say that. Then there's something I want to come back to about the Federal Reserve and what might happen if Trump does a second term. Still a matter, it's not settled yet. It's still in dispute. Twitter is right about that. But Biden's claim is disputed. The thing, what was it, about the global reset. So this is how it could roll out. And this is my understanding. We're going to have ID passes, vaccination passes linked to where we can go and stuff. It'll be on our mobile phones. And then that will follow us around all over the place. And then they can deposit, they can create UBI. The currency collapses. Okay, we're going to go to a whole new currency, one that's globally agreed through the IMF or whatever, right? By the way, this is pure speculation on my part. And we have UBI, a new currency that gets dropped into people's phones. It's a closed system, a central bank digital currency that's closed. So we're locked in, and then all our purchases and everything that we spend and is tracked and known. Now that's an incredible intrusion on civil liberties, because it means that, for example, if I want to engage in a political campaign that the government disapproves of, well, I can't give that central bank digital currency to them. They'll know. So I'm just being surveilled all the time. And then what could happen as an alternative system is people using silver, gold in face-to-face contacts, and then using Bitcoin and probably privacy-focused cryptocurrencies like Pirate Chain and Monero for electronic transactions, and then using VPNs and all kinds of stuff like that to preserve their privacy. So that's one possible way that it could roll out. Because I think, the people who know about banking and financing, they must know, even I as a social worker knows that the value of the pound and the dollar and the euro is being destroyed. And I'm not financially trained, so the bankers must know. So that's one possibility. Then there's something else. This is the third point about the Federal Reserve that I do not understand. And I first learned of it from Tom Luongo because he mentioned it in one of his articles, which is that in March 2020, Donald Trump, in the CARES Act, he put the Federal Reserve inside the control of the Department of Treasury. Now, I don't understand how it kind of works or the details of it, but the Department of Treasury now runs the Federal Reserve. Effectively, he's nationalized it. Now, who's tried to do that before? Reagan, and he got shot, and that warned him off. And the one before that was JFK. Also, he tried to control the Federal Reserve. Also, I understand Abraham Lincoln and Andrew Jackson. And here, Alexander, you may know more about this than I do, given your history background, right? I'm just touching upon these things. But the Federal Reserve, for people who don't know, is a privately owned bank owned by Goldman Sachs and Bank of America and JP Morgan and a couple of others, Citibank. And that lends money to the US government, which then issues dollars. So the US government is in hock, has to pay back the Federal Reserve. But if it's nationalized, what I do understand what's happening, and it's had very little coverage in the mainstream media and even the alternative media, is that Trump is somehow shifting the debt that the US government has onto the Federal Reserve's balance books, which effectively he's bankrupting the Federal Reserve. Now, it could be that Trump is a real money advocate. He believes that currencies should be backed by something real, possibly by gold. And this is his way to break out of the central banking fiat currency system that has such a hold on virtually all of the world, apart from those so-called axis of evil countries, Russia, North Korea, Iran, Venezuela, and Syria. They're not inside the global central banking system, is my understanding. So,
Alexander, that's interesting. Unless, of course, Crypto Richard Alexander, you find a way to steal an election.
oh my God.
Well, this is
we may need to do a second video.
but this is precisely the point. You see, you can bring the Federal Reserve Board, because the Federal Reserve, the reason it started going in for QE was because it needed to bail out the US financial system, the US banks, who, as Crypto correctly said, were people who are major stakeholders of the US Federal Reserve Board. Bringing the US Federal Reserve Board under the control of the Treasury could be a device, if it was used by someone perhaps like Trump, to stop this merry-go-round whereby the Federal Reserve Board then provides money to the banks, which the banks then use for whatever it is that they've been doing, basically to buy back their own shares, to sort out, to finance the stock market, to do all those kind of things. That's which we've been seeing with the QE that's been operating over the last few years. But think what someone else might do with that. I mean, the thing that a lot of people say will be the great turning point is if the central bank, the Federal Reserve Board, starts producing money which the government then uses to conduct its operations, so that the US government, or any government, instead of financing its operations through taxes, which links the government to the productive forces of the country which it is governing, if instead of doing that, it finances its operations by printing or producing money. Now, that is what happened in those other historical cases where governments essentially lost control of the system, that they found that simply by producing money, they could for a time finance their operations. But in the end, the whole system just collapsed on itself. And that is a line which we've been getting very close to crossing. It's to some extent happened this year, but not in a big or really significant way. It could be easier for it to happen if the Federal Reserve Board is more attuned, is more controlled by the US Treasury itself. So this could turn either of two ways. It could either be used to bring discipline to the system, which is out of control because the Federal Reserve Board is producing money which is giving away to its stakeholders, the banks, or it could be used badly to finance the US government's own operations, which might be even more dangerous, and which some proposals, like those made by people like AOC, like people even like Elizabeth Warren to some extent, like all this sort of caricature new monetary theory that I've been talking about, that all of that might point in that direction too. And where I disagree with Crypto and perhaps to some extent with Tom Luongo is I think people, when he says that people haven't noticed this change, I'm sure that the important people, the people in the money markets, most definitely have noticed this change and that they are taking note of it. Their expectation, by the way, is that as the pandemic recedes, we're going to see a massive spending in massive spending, both by the US federal government and through all the money that's been saved by people, and that we will see a boom. That may be right, that may be wrong, but that we will see a short-term boom. The risk is, and it's a very real risk, that boom is going to become very hot, and with Biden looking to open up the US economy again to import penetration, as it was under Obama, we will see a flood of imports pouring into the United States to feed that boom, with major budget and trade deficit crises coming, and with the Federal Reserve Board under the control of the Treasury, the US producing more and more money in order both to feed the boom and to cover the deficits. And that, as I said, as I was saying earlier, that could result in many, many problems. So it does depend very much on who is the president after the 20th of January.
Yes, indeed. And
right.
I agree with you. I'm sure Goldman Sachs and Bank of America and all their acolytes and supporters have noticed this. And maybe that's why there isn't much attention given to it on the mainstream media.
No. But I think that's true. Carry on. Yeah.
Crypto Rich, final question, and we'll wrap up the video. Going forward, what are you looking at, say, in the next, outside of the president, outside Biden, Trump, 3 to 6 months that you would tell our viewers to look at if they're considering getting into crypto, whether it's Bitcoin, Ethereum, Monero, whatever? What are some of the indicators that you look at and that viewers should take a look at in their everyday lives to say, you know what, this is a good time to start jumping into crypto, or maybe I should stay away and wait a little bit longer? What would you advise our viewers?
Well, I got into Bitcoin in 2013. I knew about it when it was $5. I bought it when it was 15. I wish I'd bought it when it was $5, right? I would say people should do their own due diligence. They should check it out. Go and educate yourself. Don't rely on what the mainstream media say about it, because they talk nonsense about Bitcoin being a Ponzi scheme. It's not. It's nothing like a Ponzi scheme. It's decentralized money for people. The other is, don't put in any more than you can afford to lose. So, we haven't taken out a massive mortgage and put everything on it. We haven't done that. I don't recommend people do that, because in reality, I don't know what's going to happen in the future. However, if I look at, I suppose it's a little bit like reading the weather report. If I want to predict what the weather's like tomorrow, I'll consider all these factors: air pressure, wind direction, cloud cover, the time of the year, latitude, longitude of the place that I'm looking at, and that'll give me some likelihood. And it's the same deal with Bitcoin, that look at the fundamentals and also the technicals. The fundamentals that every 4 years it halves, the fundamentals that governments are printing fiat like it's going out of fashion, the fundamentals that more and more organizations and individuals are moving into cryptocurrency as well as into gold, the fundamentals that there's a fund, Grayscale, who earlier on this year, they were buying 150% of the new Bitcoin that was coming, of the new supply every month. 150%. So they were buying that much. So when a big player comes in like that, that might be something you want to pay attention to. And then what I recommend, if anybody does do it, the simplest way is to get into Bitcoin, possibly Ethereum, and hold it. There's a term in the cryptocurrency sphere called HODL. Hold on for dear life. Mm-hmm. So hold it. Mm-hmm. Come back in a year's time, 2 years' time, 3 years' time, 5 years' time, 10 years' time. And then you'll have done really, really well. Right. So that's what I would say. And then I'll have please do subscribe to my channel. There are other channels that cover cryptocurrency as well. And with your permission, Alex, I can give a link to an educational platform, Token Metrics, if people want to find out, and gives really, really great grounding in cryptocurrency.
We'll put it all in the description box. Yeah. We'll put it all in the description box down below.
We'll do that. And I just really, really appreciate this conversation.
Well, I've got one final question actually before we sign off, because I think you mentioned it, Alexander. Maybe you also mentioned it too, Crypto Rich. You guys said the destruction of currencies. Yeah. This is to both of you guys. What do you mean by that? Should people be worried about the money they have huddled away in the bank?
Well,
their dollars, their euros, their pounds. I mean, did you say that, Alexander?
No,
destruction of currency?
I
Or
didn't say
both of you
that.
guys said it, that they're destroying our currencies. What does that mean?
What the word I used was debasement. It's
Uh-huh.
currency debasement, which is when money,
Yeah,
people lose confidence in it and it begins to lose value.
but what does that mean for the everyday person? Should
Well,
should people be worried?
Yes, I think.
Can I respond to that? Right. If I look at the example of Zimbabwe under Mugabe, Zimbabwe printed dollars, Zimbabwean dollars, in order to repay the IMF loans. So he's just printing them in order to repay.
Yeah.
And what happened was the supply increased so much that people couldn't afford goods. Inflation went so high. So then what he did, he printed even more in order to buy support from the army and the police forces and supporters and stuff. And eventually the Zimbabwean currency collapsed. It disappeared. It got destroyed. You can go to eBay. I looked a year or so ago and buy $1 trillion note for a couple of dollars or something. And then people started transacting in dollars and rand and gold and euros. And when Bitcoin was available, in Bitcoin, because the currency had been effectively destroyed. Alexander is right. It is debased. That's the proper term. But, in a dramatic sense, it has been destroyed. It has no value.
Yes.
No one will accept it.
That is always the danger, and it is a danger which exists. It must be said very clearly in any system which is fiat-based, that as the great economist John Maynard Keynes once said, you debauch your currency. Keynes is often seen as the person who believed, in deficit financing and constant spending. That is actually something of a misunderstanding of his ideas. He only recommended that in very specific circumstances where there was a very severe depression of demand, at which he wanted to stimulate. And most of the time, unknown to what most people think, he believed either in balanced budgets or even running surpluses. So this is the thing about Keynes. He was always concerned that currencies could be, as he put it, debauched. And if that happens, if that's taken to its ultimate point, a currency can be destroyed. It can lose all value. And then, of course, that is a terrible system because economic activity in a modern industrialized setting depends on money. If the money loses all value, normal commercial activity ends and the hardship can be absolutely terrible. And it can certainly happen. And when it happens, it is traumatic for the society it happens to. And the example everybody remembers is, of course, Germany in the 1920s. People don't realize that, in fact, the German currency collapsed twice, once in the 1920s with massive overspending, first to fund the First World War, then to pay back reparations and debts that Germany had taken out. Some of those debts to pay the reparations that it was paying to the Allies, and also following the collapse of its own industrial base when it lost the Ruhr for a certain period to France. So Germany suffered a financial collapse of that kind in the 20s. It suffered an identical collapse in the 1940s when. In the late 1940s, in the mid 1940s, first again to finance the Second World War, and then after the German government collapsed up with the end of the Second World War, it took the German currency, the Reichsmark, down with it. Germany has had 5 currencies during the 20th century because of the struggle it has had to rebuild confidence in its own currency. It's one of the reasons why the Germans take such a conservative approach to money, because they've been there before. They understand the trauma of it. I'm going to say also that Russia, which also has been through revolutionary experiences, also witnessed the collapse of its currency after the Russian Revolution. It too has had major problems with restoring confidence to its money. If you experience that, you do not want to live through it. It can be terrible for a society. And recklessly debauching your currency can be a disastrous thing. And if people sense that that is what is happening, then they will try to prepare for it by putting what money they have before it becomes utterly debased into assets in order to have a store of value if they sense or fear that the currency will go. So I don't want to sound apocalyptic. I'm not sure. I'm not saying we're there yet. I think the US authorities have plenty of time to turn things around. I don't think we're looking at that kind of currency crisis at the moment. But the trajectory is not good. One worries that a Biden administration is going to push that trajectory a whole step further, which perhaps a Donald Trump administration might want not to do, in which case, as I said, as someone else said, I can't remember who it was, what is not sustainable, it's actually Margaret Thatcher, what is not sustainable cannot in the end be sustained. And that is true of money, as it is true of all things. If you debase your currency too far, if you debauch it, as Keynes said, then you will end up in a situation very similar to one that afflicted Germany, that afflicted Russia, that has afflicted many other countries around the world.
All right. Great. Great conversation, guys. We will leave it there. Thank you very much to Crypto Rich. Guys, you will find all his information, his channel information, and any other resources that he has mentioned in this video, as well as other resources that he may have for you as well. You'll find that all in the description box right underneath this video. I please advise everyone to check out his channel and subscribe to his channel. And of course, we have Alexander Mercouris as well in London. Thank you, guys. Duran Shop, PayPal, Patreon, Subscribestar, Bitcoin. You'll find that all underneath in the description box down below. Take care, everybody.